In this video, I'm going to show you a super profitable scalping strategy that utilizes the RSI indicator. It's very easy to use, works in almost every single market, and it also has a pretty high success rate if used correctly. I'm also going to backtest it 100 times using a backtesting website called Tradingview. I'll leave a link to it in the video description. Let's get into it. Now, this strategy consists of 4 different indicators. To add them to your chart, you're going to go to Tradingview and then click on Indicators and then start typing. The first indicator, which is also the core indicator of this strategy, is the Relative Strength Index. This one under Technicals. The second indicator is a Buy-Sell indicator called Twin Range Filter. This one by Colin MCK. The third one is a Trend Filter indicator called Market Bias. This one by Professor X. Last but not least, we're going to add a Stop Loss Placement indicator called Average True Range or ATR. And then we're going to change some settings, starting with the Market Bias indicator. Click here on the Inputs tab, change the period to 60, and then change the smoothing to 30. Then on the Style tab, you're going to uncheck this first option. And then we're going to change the RSI settings. To do that, click here on the Inputs tab, change the RSI length to 7. Then on the Style tab, you're going to uncheck the RSI based MA and then click OK. Then click here to access the ATR settings. On the Inputs tab, change the length to 5. And then on the Style tab, change the precision to 2. And then click OK. Now, how are we going to trade using these indicators? Well, let's start with the RSI. We all know that the RSI indicator is used to identify overbought and oversold conditions in the market, and that is exactly how we're going to use it to trade. This top horizontal line is the RSI upper band, and it's at the 70 level of the RSI scale. This bottom horizontal line is the RSI lower band, and it's at the 30 level of the RSI scale. This purple line is the RSI line. When the RSI line crosses above the 70 level, that indicates an overbought market, so we're going to be looking to take only short trades. Conversely, when the RSI line crosses below the 30 level, that indicates an oversold market, so we're going to be looking to take only long trades. Now, the Twin Range Filter is a buy-sell indicator, and it's going to be giving us the buy and sell entry signals. When it prints a long signal just after the RSI gets oversold, that is a signal to buy. And whenever it prints a short signal just after the RSI gets overbought, that is a signal to sell. The Market Bias indicator is a trend filter indicator, and we're going to be using it for 2 things: trend confirmations and pullback confirmations. For trend confirmation, here's how we're going to do it. When this trend ribbon is colored bright or dark green and the price is trading above it, that is a bullish trend. Conversely, when it's colored bright or dark red and the price is trading below it, that is a bearish trend. For pullback confirmations, here's how we're going to do it. In a bullish trend, the normal trend color of this trend ribbon is bright green. When the ribbon turns from bright green to dark green, that would mean that the market is in a pullback. In a bearish trend, the normal trend color is bright red. When the ribbon turns from bright red to dark red, that would mean that the market is in a pullback. Last but not least, the ATR indicator is going to be used to determine our stop loss levels. Now that we know how each indicator works, the next question is, how do we combine them to create a profitable trading strategy? Well, I'll tell you, just after introducing the sponsor of this video, hankotrade. If you're looking for a broker with some of the lowest commissions and spreads in the market, then check out hankotrade. I use them on a daily basis. As you can see here, this is my trading history. I mainly scalp gold, and up here you can see that it's a live account. For those of you that love high leverage, hankotrade offers up to 500x leverage, which basically means that my $1,000 deposit could have the buying power of $500,000, which is really insane. And if that's not enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, so you'll have $1,000 to trade with. To get access to the bonus, as well as all the other perks, sign up to hankotrade using the link in the description of this video. Now back to the video. So to take a long trade, first, the trend ribbon of the market bias indicator should be colored green and the price should be trading above it. This indicates a bullish trend. Second, the trend ribbon of the market bias indicator should turn from bright green to dark green to indicate that the price is in a pullback. During the pullback, the price should not break and close below the ribbon. If it breaks and closes below the ribbon, like this, that setup becomes invalid. The third condition is that during the pullback, and when I say during the pullback, what I mean by that is the time when the trend ribbon is colored dark green. So from here to here, this is what I refer to when I say during the pullback. Okay, so during the pullback, we want this RSI line to break below the 30 level. This indicates that the market was oversold in an uptrend and signifies a higher probability of an upward move. After the first three conditions have been met, we then wait for the trend range filter to print a long signal. For that long signal to be valid, it should be printed during the pullback. If it comes after the pullback, we will have to skip that setup. This is an example of a long signal that came after the pullback. If you see something like this, you stay away. All our entry conditions are met on this candle, so we're going to enter a long trade. The stop loss is going to be set at 3 times the ATR value of the entry candle. Now, to get the ATR value, you just hover the mouse pointer over the entry candle, and then you look at the ATR value on the bottom left. You're going to take that value, multiply by 3 to get 3 times ATR, and then multiply by 100 to change it from points to pips. So now the stop loss is going to be this pips. For the take profit, we're going to set it at 0.5 times the risk. We let the trade run and take profit. For short trades, we're going to reverse all the conditions. First, the market bias indicator should be colored red and the price should be trading below it. This indicates a bearish trend. Second, the trend ribbon of the market bias indicator should turn from bright red to dark red to indicate that the price is in a pullback. During the pullback, the price should not break and close above the trend ribbon. If it breaks and closes above the ribbon, like this, that setup becomes invalid. The third condition is that during the pullback, we want the RSI line to break above this 70 level. This indicates that the market was overbought in a downtrend and signifies a higher probability of a downward move. After the first 3 conditions have been met, we then wait for the trend range filter to print a short signal. For that short signal to be valid, it should be printed during the pullback. If it comes after the pullback, we will have to skip that setup. All our entry conditions are met on this candle, so we're going to enter a short trade. The stop loss is going to be set at 3 times the ATR value of the entry candle. Again, this is the ATR value, and this is the calculation to get the pips. For the take profit, we're going to set it at 0.5 times the risk. We let the trade run, and it hits take profit. Now, I backtested this strategy 100 times with an account balance set at $1,000. Because of the high potential of this strategy, I used an inverse risk-reward ratio of 2:1. So the loss was set at 2% and the profit was set at 1%. After 100 trades, the win rate of this strategy was 81% and the gain on the account was 52.52%. I know the risk-to-reward ratio was negative. For every $2 we were risking, we were only making $1. But with a win rate of 81%, the overall strategy becomes super profitable. You can still have a negative risk-reward ratio and still have a profitable strategy. We say that it had an amazing profit factor of 2.13, 7 consecutive wins against 4 consecutive losses, and a maximum drawdown of 7.76%. Also, it took me just over 4 months to find these 100 trades. This strategy was done and tested on the 5-minute time frame of GBP/JPY. However, you don't have to stick to this. You can do this strategy on any security that you like to trade as well as on any time frame. Remember, this was just a backtest of 100 trades, and these past results do not necessarily guarantee future results. This video is in no way financial advice, so do your own research and backtests if you're interested in trading using this strategy. That's been it for this video. Hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching, and I'll see you guys next time.